Hi, everyone, and welcome. My name is Penny Corner. I'm the CEO of the Master Plumbers Association of Queensland. Today, we are excited to share our updated charge out rate guide and calculator. This charge out rate guide and calculator is a vital resource to help plumbing and gas businesses understand their true costs and set sustainable charge out rates. I would like to introduce Zoe from Xact Accounting, who has been instrumental in updating the document in partnership with MPAQ. Hi, Zoe.
Hey Penny, really lovely to be here. As Penny said, I'm Zoe from Xact Accounting. So we work with the building construction industry, builders, a lot of plumbers, and we're just here to help you guys make sure that you are doing the best you can, and particularly numbers wise. We're very proud to be partnering. Sorry, we're very proud to be partnering with Master Plumbers in relation to this calculator. It's a very effective resource for you to use to just make sure you can understand and determine whether you're in line with market charge out rates.
It sure does, Zoe. And I mean, the reason why we developed this guide and we continue to update it year on year is that too often we hear from our members that businesses aren't charging their real costs. And this tool makes it really easy to understand your lost days in the year, your employee costs, so that you can really set a rate that works for your business. And the beauty of it is it's very simple to use. So whether you're a sole operator or you're running a team, the guide and calculator can adapt to your situation and give you a clear picture of what you need to charge in your business. So some of the guides also ensure that you're covering the costs, but also gives you the ability to compare what others are charging in the industry. So it's a bit of a benchmark to ensure that you remain competitive as well. So now I'd like to hand over to Zoe, and she's going to walk through the calculator with us. Thanks, Zoe.
All right, I'll just share my screen. So thanks, Penny. So as Master Plumbers members, you will be able to find this on the website to download. I've just got the employee costs page open. This is the one that links directly with the charge out rate guide that's just been republished. So effectively, it's a fairly straightforward calculator. So the idea of it is just to give you an understanding of costs. Now, when a lot of people start off, they go, oh, well, I'm paying someone $50 an hour. That's how much it costs me to employ them. That's not actually the case. There's lots of little hidden costs that you may not be aware of and you may not be factoring into your charge out rate calculations, which is where this calculator comes in. So the blue fields here are all the ones that you can change. The yellow ones are formulated, so leave those ones alone. But effectively, I'm just going to use column C as the example. This is the example that links directly back to the literature. So we have an employee here who you're paying $50 an hour to. As an employee, you have to pay them superannuation. As an employee, they have to be covered by work cover. Now, annual leave, sick days, public holidays, they are your they're your government mandated leave days. So everyone gets 20 hours, if only, 20 days of annual leave a year, 10 sick/personal leave days, and then there's 10 public holidays in the year. Now, this is where you can use the calculator to your benefit with these other ones. Now, this isn't an exhaustive list of all of the down days that you may have during the year, but these are the most common that we see. So we've got the rostered days off. That's usually one a month, so 12 in the year. We've got training days, other meeting days, that sort of thing, usually around 5 days a year. Now, this is where a change has been made this year. So previously we had 5 days for wet weather or down days. We've increased that to 10 this year, and that's really due to all of those extreme weather events that we've been seeing, particularly in Queensland this year already. Now, depending on the type of work you do, you might want to increase that, you might want to decrease that. That's for you to play with there. And then we've also got in here the quiet trading as well. So those days where there's not as much work as you would like to be on. So again, here we've used the hours a week off the plumbing award, so 40 hours a week. You might have 38 hours. Again, that's for you to change as you need to. So on 40 hours a week, everyone's got an 8-hour workday. Now, we put in a provision for lost hours for efficiency. So depending on the level of the person that you're trying to figure out the charge out rate for, their provision for lost hours may be more or less. Now, lost hours can also include travel in between sites where they're not actually doing anything. So for this example, we've put in 1.5 hours for the provision for lost hours. Again, entirely up to you. You can move that and change it as you see fit. The great thing now is that superannuation is not changing again. So we've finally reached the last change in super. It's 12% now and will be that for the foreseeable future after all those small incremental increases over the past couple of years. We've also included a really basic 1.2% for work cover just to try and cover that cost for your employees. Now, we haven't put anything for payroll tax in here. That obviously will be dependent on your circumstances. If you are paying payroll tax, definitely put in a little bit of a buffer there, sort of 1-ish% at least to cover that cost as well. So just as a little side piece there in relation to the payroll tax, if you are if you have wages that are over 1.3 million, you need to be enrolling for payroll tax. Doesn't necessarily mean that you will have to pay it. It's dependent on a whole heap of things, such as how many apprentices you have, etc. But you will need to enrol for payroll tax, but speak to your accountant if you are coming near to that threshold. So after we fill in all that information with all our days and have our job efficiency, etc., this next step is actually figuring out how much it really costs you to employ someone. So an employee on $50 an hour, their annual pay is $104,000 a year. Superannuation at 12% is $12,480. I'm going to come back to this overtime in a minute. We've got our work covered there, and as I said, if we had a figure in the payroll tax here, this would calculate. I'll just do an example there. So that changes the estimate there. Now, we've also got overtime in here. This was put in due to talks with Master Plumbers members and board members about including overtime in these true cost of labour calculations. That's due to the fact that a lot of the time, even if people are as efficient as they can humanly be, doesn't mean that there isn't going to be overtime. So the overtime calculation that we have in the calculator here, and you'll see there's a little red arrow here, it's got a note on there. So we've calculated overtime for the first 2 hours for 48 working weeks. So obviously you don't get overtime on annual leave. So we've done that at the 1.5%. Now, if you're finding you are consistently having overtime with people and it's pushing it out to that 2 times rate, you'll need to have a look at that figure here and the calculation here. But if you are pushing that out, I suggest talking to your accountant or to us about how we can change that calculator for you, because it's going to change the calculations a little bit there. So for someone who's being paid $50 an hour, with all of these costs included, it's actually costing you $60 an hour to keep them employed. So effectively, it's costing you an extra $10 on top of what you're paying them each hour to work. So the second part of this calculation is figuring out how many work hours people actually work. And this is where that job efficiency calculation comes into play. So whilst there's 365 days in the year, there's actually only 260 of them that you work. So the five days a week. which nets out at 2,000, a bit over 2,000 hours a year. Now, that available work days is if you worked every single day, took no annual leave, had no sick leave, public holidays, anything like that. So taking all of these days that we've put in up here, as are going to be off time, people won't be working, you actually end up with 188 days that it's possible for people to work during the year. So in this calculation up here, there's actually 72 days out of the year where people are not going to actively be working. It seems like a lot, because it is, but remembering 40 of those are mandated leave days, and not everybody's going to take all of their sick days a year. They're not going to take all their annual leave days a year necessarily, but it's just to give you an idea of actual costs. So we get down here to our 188 days that people can work, which gives you 1,500 hours. Now, this is where the efficiency comes into play, because people, as much as you would love them to, are not going to be working 100% of the time every single day. And this is where the efficiency comes in. So we've said previously that there was 1.5 hours a day that people won't be doing any productive work, charge out work. So with that efficiency of 82% or 81%, I think it was, 81%, they'd actually only be working for 1,200 hours, 1,222 hours a year. So in fact, it's actually costing you $102 an hour to keep that person employed. So it's a bit over double what you're actually paying them. Now, this is where the charge out comes into play. So you've got to make sure you're at least covering that $102 just to keep that person employed. But you need to be charging more than that, obviously, because that's not the only cost to the business. So this is where your margin comes in. And there is a difference between margin and markup. So the margin is the amount of money you want to have left over at the end. The markup is what you need to increase your costs by to get to that margin. That is actually a whole other entire webinar that we could do on the margin versus markup. And actually, I think Suze from our office there is a whole webinar available on that as well, if you wanted to jump into that as well to run through that. So in this instance, if we wanted a desired margin of 50%, now this is just on your COGS, so your cost of goods sold. This doesn't have taken into account any of your overhead costs, so things like your rent and any admin staff, that sort of thing you have. So with a plumbing business, you need that margin to actually be quite high. And that's purely because you'll find that your overheads generally are a little bit higher than, say, a construction business, for example. So obviously the higher you can push the margin, the better, but there is a limit to how much the general public will pallet with costs and charge out rates. However, if we're looking at this with $50 an hour, which is sort of the average hourly rate for an employee in the plumbing industry today, if you wanted to get that 50% margin, you need 100% markup. So from that 102 it's costing you, you would charge the client $205 an hour to cover your costs. And that's really basically it, Penny. I'll just put in here as well, just before you jump back in. Now, this is just looking at one person in isolation, one employee at $50 an hour. Now, you will have, as you can see up here, we have in the base calculator, you'll have employees at different rates. Now, it's up to you how you want to do this. Some people just go, I'm going to charge off the highest per hour and come up and go, okay, that's my flat rate for everybody. Some people do an average, some people have specific lines for each type of employee, like you'll have apprentice or qualified, that sort of thing, and they'll change the charge out rates. Again, that's entirely up to you how you want to run that. But yeah, that's me. I'm sure Penny has some questions.
Yeah, thanks, Zoe. That was great. It was really good to see the run through, and I think it opens up the true costs associated with having employees, right? It's not always just what you're paying them, and so getting that message out there through this guide and calculator is key. So, what would some of the key mistakes around this that you would see out there in the industry, Zoe?
Well, in terms of the calculator itself, it's more that people seem to underestimate the number of days people are not going to be there, and also how efficient their teams actually are. And efficiency is a really big one. There's a real strive and push to make people more efficient. I mean, that's the exact reason why people have their logbooks and everybody on their programs to figure out where they are, what they're doing, and all that sort of stuff. So it's just trying to remember really that figuring out a charge out rate is a lot more nuanced than going, I want to take, I want to have $100,000 left at the end of the day. For me, you've got to be really careful in how you're actually calculating that, because a lot of the time you'll miss things, which will then eat into your bottom line.
So, how often do you think a plumbing business owner should be reviewing this?
At the very minimum, annually.
Yep.
I have a lot of clients who will actually do it every 6 months. And it's just trying to keep in line with costs and what's going on in the industry. And as with any industry, it's the same in the accounting industry. It's very difficult at the moment trying to find qualified, reliable people to work in your business. So you'll be finding that when you're bringing new people on, and as in any industry, when you're bringing new people on, you tend to be paying a little bit more for them than you are your current staff. And so you need to take that into account when you're figuring out charge out rates, because if you keep adding people in who you're paying more, you're just cutting into your bottom line if you're not updating your charge out rates on a regular basis.
Yeah, that makes sense. So thank you so much, Zoe, for walking us through this tool today. We hope that this guidance with the guide and the calculator will give you confidence in working out and setting your own individual charge out rate. It's a fantastic tool and we encourage everyone to use it. And your rates should really reflect the true value of the work that you do. So please remember that. So you can download the guide and also the calculator from the MPAQ website. And it also has a templated letter there about wanting to increase your prices as well. So if you want to write to your customers ahead of time and let them know that price increases will occur from a certain date, there's also a templated letter there to assist you. So if you have any questions, please reach out. Thank you so much for watching, and we wish you all the best with using the guide and the calculator. And thank you so much to Zoe for walking us through that today.
No problem. Thanks, Penny.
Thank you.